Let's understand New Zealand's tax system. New Zealand has a progressive tax system for individuals. This means that the more you earn, the higher the tax rate applied to your additional income. This system is designed to distribute the tax burden fairly based on earnings. There are 5 tax brackets, with each successive bracket applying a higher tax rate, starting from 10.5% as the lowest to 39% as the highest. The current tax thresholds have remained unchanged since 2010, except for the addition of a new top bracket in 2021. As wages have grown over time, people have paid more of their incomes in tax at higher rates. And some would argue that this is unfair because for 14 years, taxpayers have gradually paid more in tax due to inflation alone. There is a problem with the current tax system. Without regular adjustments to tax thresholds, the tax system has failed to keep up with wage growth, leading to what is known as bracket creep. This occurs when rising wages push taxpayers into higher tax brackets, increasing their tax burden even when their real purchasing power has not significantly improved. Since 2010, bracket creep has caused taxpayers to pay higher effective tax rates over time, as more of the income has been taxed at higher rates. For the tax system to be equitable, it needs to be responsive to economic changes. This issue has made the tax system less equitable over time, as this has not happened for 14 years, not until last year at least. In 2024, the New Zealand government thankfully adjusted the individual income tax thresholds. These updates aimed to address the bracket creep to ensure tax rates better reflect wage growth that had occurred over time. These changes mean that more income will now be taxed at lower rates, slightly reducing the overall tax burden for individuals earning over 14,000 annually. Here's a comparison table to show you the old and the new tax brackets. So who is affected by this change? Since individual income tax is based on annual earnings, the updated tax thresholds impact all income earners in New Zealand. Anyone earning over 14,000 annually will see some reduction in their tax liability because of the new thresholds. And this is good news. What this means for you basically is that with the new brackets, you will take home more of your earnings, as a greater portion of your income will be taxed at lower rates. Let's break it down with a specific example. For a single person in work earning 80,000 annually with no dependents or partner and not on super, you will save $1,042.50 in taxes. While this is not going to drastically change your disposable income overnight, I take this any day over no change at all. So what do I think? The changes do offer some tax relief after years of rising wages and stagnant tax brackets. And while this marks a shift in New Zealand's tax system, I personally think this is a bit too little and too late. To create a fairer tax system, tax thresholds should be automatically indexed to keep up with inflation and prevent bracket creep from eroding incomes again. It's surprising that it has taken so long for these adjustments to happen. Politicians are largely to blame for the delay. For example, in 2008, Labour legislated for tax threshold indexation, but this was repealed by National after the subsequent election. And then in 2017, National enacted tax band adjustments, only for them to be reversed by the following Labour government. These back and forth changes have left taxpayers stuck with outdated thresholds far too long. What do you think? Will the upcoming 2025 government budget address this, or will we find ourselves in the same situation years down the line? Should tax thresholds be adjusted automatically? Share your thoughts below.